Hey guys, James here with Waterford Business Solutions. And as we kind of approach mid-June here, we're kind of coming up to another tax deadline, which is for estimated tax payments for federal and state. And while some of you may not have heard of this, and while it's not something that most people need to worry about, when we're dealing with business owners or people that are earning income outside of W-2 income, making estimated tax payments is technically a requirement that you have to do. And we really wanted to take some time with the tax payment deadline coming up pretty much in 2 weeks at this point to discuss why you should make sure that you are giving or doing these estimated tax payments, because ultimately they will save you money. Before we jump in, I invite you to go ahead and like and subscribe to our channel here. That way you go ahead and get more information just like this to help you grow your business, understand your business, and understand your finances even more. Also, go ahead, share this video with anyone that you think can use it, leave comments, everything like that. Any engagement with our videos really helps to boost it and get the information out in front of more people. So as far as estimated tax payments, it is something, like I said, that's legally required for pretty much anyone who is making income. And ultimately, if you're being paid a paycheck, you're required to make estimated payments. The issue is, if you're being paid a paycheck, if you've got W-2 income or something like that, you're used to your employer withholding your income taxes from your paycheck and paying it to the IRS for you on a weekly, monthly, quarterly basis based off of whatever your employer's requirements are there. Those count as your estimated payments. And as long as you're only making W-2 income, you're paying in your fair share, and as long as your W-4 is filled out correct, you should be pretty accurate on how much taxes are being paid in, what's owed there, everything like that. So by being just a standard W-2 employee, it's pretty much taken care of for you. But the minute we get out of W-2 employees and we get into you're doing stock trading, you're doing your own small business, you're a 1099 contractor, you win the lottery, you've got any type of income that's occurring outside of that W-2, now we start running into you've got to figure out that estimated payment yourself. Now, sometimes when we're dealing with retirement draws, 401k draws, anything like that, we can submit a document to the company and have them withhold stuff for us automatically there, and that'll definitely help us out there. But then we're also going to have situations like a small business. If, like we deal with most of our clients, if you've got a small business, there's nothing here, there's no way for you to be paying in taxes as the business income comes in other than estimated tax payments. And the IRS requires these to occur in a reasonable time frame. That's what the law states. And so it's set up on a quarterly basis. April 15th, June 15th, September 15th, and January 15th. We've got to pay in taxes on those dates based off of the income you've received and or the income you expect to receive. So if you've ever gotten a tax return and it says, hey, here are the suggested estimated tax payments, those are all based off of, hey, based off of your income from 2024, based off of the taxes you owed for 2024, this is what you need to pay in each and every quarter so that you are paid in for your taxes, you've paid in your reasonable amount, and you are not going to owe any taxes, or more importantly, owe penalties and interest, because that's where estimated payments get us. If you are not paying in a timely manner, the IRS is not only going to require you to pay in the taxes that you had to pay in the first place, they're also going to charge you penalties and interest on those taxes for not paying them in a timely fashion. So you're going to end up paying not only the taxes in the first place, but you're going to pay more in taxes. And while sometimes this might be $7, $5, $50, something like that. It could also easily be $500, $2,000, $5,000. I've seen that on tax returns based off of people's taxes that they owe. And the biggest thing that we ever want to do in taxes is pay as little as we can. And one thing that we can do to avoid taxes is pay in those estimated taxes, and that way we don't get hit with those penalties and interest. And again, there's other ways to save money on taxes, but this way we're only paying in what you owe in taxes. We're not being penalized for not paying in those taxes. And that's a huge, huge thing there. So that's the biggest reason why you should pay. Now, ultimately, any good tax preparer, even if you're going to H&R Block, they should go ahead and provide you at the end of your tax return a schedule of estimated payments if you need to pay in estimated payments. However, those estimated payments, like I said, are going to be based off of your 2024 income or your prior tax year income when you get those. So they aren't inherently accurate. You could do, especially with our small business owners, you could have a great year where you owe a ton of taxes, and that's going to greatly inflate your estimated tax payments. And then you could have a bad year or an okay year where you don't have a ton of profit and you don't owe a ton of taxes. So if we follow that to a T, you're going to end up likely paying a lot more in taxes in the long run, because you're paying in based off of not what's going on this year. So we want to always take a look not just at the estimated taxes that you've got on your tax return based off of the prior year. We want to look at how you are performing in the current year. What's going on there, how much income you have, whether you're doing better, whether you're doing worse, that we can tailor those estimated payments to what you are doing this year. Now, ultimately, when you get those estimated tax payments on your tax return, if you want to avoid any type of penalties, interest, those are going to be the minimum numbers you need to put in. So as long as you put in that minimum and you do way better this next year, then you're not going to get charged penalties and interest. You're just going to owe the taxes. But we still want to go ahead and make sure that we're paying in a reasonable share as you go throughout the year, because let's say you only owed $10K in taxes last year, but this year you tripled the size of your business and we owe $40K in taxes. If we only paid in $10K, come April when you're doing your tax return, hopefully, you're going to owe $30,000. And if you didn't have that set aside, are you going to be able to pay that? Whereas if we take a look as we're going throughout the year, say, wow, you're doing a lot better this year. We really need to be paying in more than this $10,000. Let's start paying in, instead of $2,500 every single period, let's pay in $7,500. Now we've at least got $30,000 that has gone in there. That $30,000, we still have $10,000 at the end, but it's a much easier pill to swallow. So making sure that we're not just doing estimated payments as required, but estimating your payments off of the workload and everything going on with your business is going to be even more important there. So that's why it's important to work with an accountant or a tax preparer who not only is going to do your tax return for you, but if you're in one of these situations where you've got variable income, especially when it comes to small businesses, work with someone who is going to do tax planning with you in addition. That way we know exactly what's going on and we can make sure that everything is as accurate as possible for you there. There's a lot of other things that can go in estimated taxes too, but really the big things are going to be reducing the shell shock of how much you owe at the end of the year when you're doing taxes, and then more importantly, making sure that we aren't paying those penalties and interest on your tax returns in addition to the taxes that you already owe. It just helps you save a little bit of money, and that's always what we want to do, is be able to save as much money as we can. As always, guys, thanks for joining us. If you need help with taxes, tax planning, understanding your business financials, anything like that, please don't hesitate to reach out to us here at Waterford Business Solutions and give us a call at 864-351-0852 or shoot us an email at info@waterfordbusiness.com. This is what we specifically work with clients on. We don't just want to do the taxes for you. We want to make sure that we're coaching you and helping you save as much money as possible and making sure that you're planning for that tax season as you're going throughout the year. And that way, once we hit January, February, beginning of the year, it's not a rush to the finish line. It is a, hey, congratulations, we're done, and you're not having to scurry around and get all of this stuff together. As always, thanks for joining us. I look forward to seeing you next week, and have a wonderful rest of your week.